Hello, friends. Welcome to Nirmal Bang. I am Piyush Jain, and today we are going to be talking about a stock which is related to education sector, publishing sector, very closely related to the school segments, to a lot of I would say across the board education sector because books are being read everywhere, and this company is no stranger to our show. We have been actually taking updates from them. So let me now welcome the management, Mr. Saurabh Mittal, the Chief Financial Officer of Chand Group. Saurabhji, welcome to the show.
Thank you. Good afternoon.
Good afternoon. Now let's talk about the current scenario. The last time we actually talked about um, after a particular time of paper price hikes, we actually started seeing some moderation. The last time we were talking about there was sort of demand, but actually we were waiting for more demand due to the NCF revision. Help us understand how the sort of right now how the market is shaping up for you.
So in terms of paper prices, they've stabilized quite a bit, and currently, since we've already ordered most of our paper, we've imported almost 60-70% of our paper already, which is coming in. So we have sufficient inventory for the next 5-6 months. Paper prices have softened a bit in the last 3 months, but considering that the NCF is coming out and NCRT will also be publishing its books probably around March, April for the classes 3 to 8 segment. So paper prices may rise at that point of time. So currently we already have enough inventory for that period. So no problem in terms for us. We should be maintaining our gross margins for this year.
Okay, and usually if the inventory is sufficient, which implies you're already 6 to 9 months from the perspective of inventory.
We have a bit higher inventory than normal at this point of time because we were anticipating a price hike. However, the excess is not too much. I mean, it can be managed in 1 quarter more. So yes, we do have sufficient inventory, and in case there is a uptick in demand, then we have sufficient paper to ensure that we can meet that demand.
Okay, we'll go to cost later. Let's talk about the most exciting aspect right now for you, and that is the NCF revision benefits. From that perspective, we know again till the K2 it was already announced again the December quarter. What has been a development now again for sort of more classes, where we are now from that perspective?
So the content is ready. Content is ready and is being promoted to schools in the last quarter. And now is the time that schools have started placing orders for the next session. We are seeing an uptick in demand from certain quarters. Of course, North India is a bit delayed at the moment because of the cold weather. Schools have not reopened as a lot of them are working online as at this point of time. So the initial 15 days have been a bit slow, but of course the inquiries are higher. Dispatches will take its time, and since the session starts in April, we'll get to know more probably around the end of January and mid Feb on where we stand. But yes, we are getting a lot of inquiries. Uh, New NCF books are going out to the market. 40% adoption is happening across the board for the new books. The existing inventory is also going to schools, so it's not that it's just the new curriculum that is going. The existing inventory is also going to schools. So it's a mix of both because the adoption of the NCF would take a period of 2-3 years to get into the system for even the teachers to understand how it is to be managed. So, we are aware of that it'll take time, so we are also not expecting 100% implementation in first year. So that's where we stand.
But right now, what are you expecting? Like K2 will get fully implemented. How about K3, K5, K6, K8, K9, K12? Where you actually expecting sort of more implementation, along with some places existing curriculum. But how you're expecting that?
So the primary will have a higher implementation because primary came out in the previous financial year, but it had come out late, so the books were out a bit later than normal. But considering it's been almost over 12 months, and it's easier to implement in the primary classes. So primary classes, the adoption rate should be much higher, around 70-80%. For the classes 3 to 8, of course, since it's just come out in November, so it will take its its time in implementation, and we expect 30 to 40% implementation in the first year.
Okay, that's interesting. And does it imply that you're expecting over a 3-year period this is going to get implemented fully, or like what is sort of average implementation
Yeah,
period?
normally it
Historical.
would. Yeah. Normally, it would take about 3 years to implement. I mean, that has been the practice. And at this point of time, it might be done in 2 years itself because things have started moving very fast as compared to the earlier. Earlier, in 2005, it was not a digital age. Right now, you can, in fact, do things faster with a lot of additional digital initiatives going into the schools, a lot of online training that is happening for schools. So maybe it will get implemented in 2 years' time instead of three this time.
And since almost 80 to 85% of your revenue is subjected to this, does it imply basically that it creates a sort of very strong revenue opportunity for you?
It
Largely
does.
because the entire new thing actually is going.
Yes, it does. It does, and of course there are challenges also because selling a new uh, product does take slightly longer time to convince people. The opportunity to grab market share is slightly higher at this point of time. Again, depends on how the schools implement it. So the opportunity is definitely there.
Right. And ideal because your distribution network would already be like from years and years would be already there. So does it also imply that in such a case over a 2-year or a 3-year period, usually the margins should be going up primarily because the sales team, the schools, they all would be knowing you upfront. So that level of sort of sales effort is not required. Will that be a sort of right effort, right assumption?
Not really, not really. So in this business, the sales effect of course, is slightly more difficult at this point of time because it's a new curriculum that you have to explain to them. So plus there is a lot of additional training. So gross margins, I think don't think will improve in the first year too much. Once it gets entrenched into the system, definitely. But if there is an uptick in volume, of course, that will definitely benefit us. So yeah, and channel, of course, channel is not. I mean, the challenge is channel is established. That is not really a worry for us. It is more about the schools actually taking it on and adopting the new curriculum that is more critical.
Well, point taken. Good point to be noted here. But to just simplify things for our viewers, um, if actually about 80 to 85% of revenue is subjected to this, ideally I am expecting then about 25 to 30% volume growth over the next 3 years. Should that be a sort of right assumption, or the number should be somewhere else?
Uh, Very difficult to give a point of volume growth year on year. But yes, over a period of 3 years, on a cumulative basis, yes, about 30% volume growth should be there,
Right.
considering
Makes
the
sense.
opportunity.
Okay, sir. And how has been basically the sort of working capital management? Because of late, a lot of efforts actually we had put over last couple of quarters. They have paid rich dividends, and now basically, how does it looking to you? Like almost, you manage the paper inventory, you manage the paper price hikes. You basically have actually managed very nicely from the perspective of the sort of new volume offtake which is coming. So, have you been able to sort of manage? The working capital levels which we have seen over the last 2 quarters?
So we, of course, we've had a good run the last 2 3 years in terms of working capital management, and we hope to have it continue it the same way. However, having said that, of course, December quarter will not be the same because there is a lot of buildup of inventory that is happening, and there is more of new titles that are coming in. So the inventory would be slightly higher, and so the challenges of inventory are definitely there. And of course, on the receivable side, no real challenges that we have. So cash flows are fine, and we hope by the year end we should be on the same level as last year, if not better, and to continue the same way that we're doing. But quarter three, of course, our gross debt would be higher, and even our inventory would be definitely higher. But that's normal for our business.
Okay. And the inventory basically which you have built for the paper also, if I look at the average prices for the first 6 months of the year, where are those prices now for you from the perspective of inventory?
They're on the same. I mean, it's 5% here and there. I mean, not really much of a difference in terms of paper prices. So, sourcing locally or sourcing from the international market, the paper prices are largely around the same place that we've sourced.
Okay, so no major sort of raw material sort of disturbance here. Apart from that, like any trigger from the sort of other markets apart from the school market? How are those markets doing, and also how have been the digital investments performing?
Our digital investments, of course, now we've got just two left. One of them is Smartivity Labs, which is doing uh, pretty well. And once we come out with our numbers in Q3, we might have an update there. Uh, in terms of the other one, that's just 7 8 months old, so that we will get to know more by the year end, because that's a more seasonal kind of business in there. We have also informed about a potential acquisition that we are doing during the current period. We hope to complete it by either the March end or the first week of April. That is in the higher education space, so that will definitely help us in the next year.
And like how the sort of scenario right now, because I know like the way you work basically is investments, and then also after a particular period of time there is also monetization. Where are these investments right now? Like are they basically over the next 2 3 years you're looking sort of for maturity there, or perhaps they are still there's still long runway of growth?
So one of the Smartivity, of course, has already matured. I mean, from the time we've investment, of course, we've invested. The value has gone multiple times because we were the angel investors in that. When it will monetize, of course, we don't really know right at this point of time. They have broken even. They're not raising funds as so immediately. I mean, we're not aware of they have a requirement of funds as such. Uh, whether a secondary transaction will happen or not is not really clear at this point of time. But yes, in the next 2 years, definitely there should be a liquidity event for us.
Okay. And and that perhaps an interesting question. Let me ask you, out of my curiosity, perhaps our viewers will also actually be interested in that. And that would be, what is actually Esther now looking from the perspective of digital investments? Any new technology or any new area where you think perhaps there could be some new sort of avenues or synergies? What are you now looking for?
Not really. We haven't really gone out to look for anything. We keep getting new ideas coming up from various sources. We keep reviewing those ideas, and of course, as and when something interesting comes up where we see conviction and strategic advantage for us, where it can help us build internally or uh, help us in our own process, that is the time that we really go out and invest. So currently nothing much on the table, but yes, we keep looking at various companies at various stages of investment, and as and when something very exciting comes along, it's the time that we do invest.
Right. One question which I did not ask, and actually I wanted to ask you now, before we move towards the last question, and that is like we talked about the volume growth when we were discussing the NCF. We also talked about the cost levels. But one thing perhaps I think which I would like to update our viewers, and that would be how has been basically the sort of pricing movement as you're rolling out new books to schools, different classes. What are the sort of pricing gains which actually we are visualizing now? Somewhere in the low sort of single digits. What sort of pricing Acrolia?
This year they are low in single digits, around 5 6% at maximum. Because if you recall, last year there was a large movement in prices because of the paper prices have gone up by almost 40 45% last year. So we had taken a good 17 18% price hike average last year. So this year, considering that we are in the school book space and would like to keep the books in a certain price range for students. So we've not gone in for a very large price increase. And of course, with paper prices being almost where they were or slightly lower than last year, we did not need to take that much also.
That's interesting, and perhaps I think we'll actually watch out for that as we actually move towards the result season. And Perhaps I will sort of again connect with you on that. But my last question, and that's perhaps in this season, this is one of my favorite questions, and that would be budget is coming up, then elections are coming up. What would be your actual expectation from the finance minister for your sector?
Uh, so to be honest, not too much for the education sector. I mean, we have a few issues on GST which we would like to get addressed because we have a GST zero product going out to the market, and GST has added a lot of costs. Since the implementation of GST, our costs have gone up by almost 4% because of the implementation of GST on across the board, whether it is on services, whether it is on royalty reverse charge, which was not there during the service tax regime. And of course, even paper prices and all services have gone up to 18%. So that's a bit of a challenge for us. Our margins have got compressed in the last few years since on account of that because we get no benefit. It's a cost. GST input is all a cost for us. That's one challenge. And apart from that, uh, as long as there is enough investment in private education, the opportunities in private education keep coming up for the private sector. That definitely does benefit all of us.
Well, let's hope finance minister actually is able to address that. We'll keep a close watch as basically the budget is being announced, and after that, we'll again connect with you. But Saurabhji, as always, it's always an insightful discussion with you, and it's a pleasure to know more basically about how the sort of developments are happening for you. But for now, thanks a lot for coming on a show and giving us all the insights.
Thank you so much. Thank you for having me.
And with that, dear viewers, it's a wrap on the show. Hope you enjoyed it.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.